Namaskar, good morning to all of you. Hello, near and dear ones. Today, I am going to start our new chapter is redemption of redeemable preference share capital. Right? Before this, starting this chapter, that simple terminology is that redemption, redeemable, and preference shares. Right? Preference share capital. And before the preference share capital terminology, I explained you. The first we should know that what is the preference shares, right? And before this starting this chapter, at least I want to share with you guys that what is the financial statement. In last lecture, the financial statement we just gone through at a glance, right? So what are the users? What are the users of financial statement that I want to explain you, right? So you can see here the parties interested in financial statement, right? What is the financial statement? We know that, right? We gone through that. What is the financial and financial statement, right? So now the question is, who are the parties or parties interested in financial statement, right? So I am going to start or share with you guys. So these all the parties which are concerned with our business, they all parties, right? They all parties are interested in our financial system, right? They all are our business concern, right? So these are the parties. So for how our financial statement or how particular organization's financial statement used for these all parties, right? So let me try to first explain the owners, right? Owners, that means parties interested to know the financial statement of our organization, right? So how the financial statement is useful for owner, right? So the owners, right? See that there are two terminologies. Second part is management, and this is the owners, right? So owner, how the owner, the financial statement is used, right? So they want to know. It means the owners want to know the financial statement or financial position of the particular business organization, right? Whether the owners, they want to know what are the changes in business policy, right? It means suppose owners wants to change in business policy, right? So look at their financial statement, right? Whether the financial statement is financially sound or not, right? So for that purpose, the financial statement is very much useful to the owners, right? They are owners, right? The financial statement helps to make decision making, right? Particular financially decision making, right? And changes in the company's policies, right? Right. So for that purpose, the financial statement used to owners, right? The second part is management, right? Management, that means the generally the management may be appointed by the owners, right? The management, that means they are managing company, the managers, right? Managers, they are managing company, right? So they may be appointed by the owners, right? So how the company, we can manage the company, right? In subject with the financial statement, right? So for that purpose, the management should know that the financial statement, right? Or you can say the financial position, right? How the economically the company is going well or bad, right? Then the third one party is creditors. The creditors are peoples, right? Creditors. How the financial statement useful the creditors, and creditors wanted to know for what purpose, right? See, the creditors are parties in which the creditors they give the credit to the companies, right? See, the creditors give the credits to the companies or company, right? Again I repeat, the creditors are parties or person that interested to know the financial statement in which the company that give the credits, right? So for that purpose, the creditors wanted to know the financial statement at whom the credit given to the company, right? The one more thing is that the creditors give the loan. Here the word creditors and here the word investor, both are different. Both are different, right? So here the creditors, that means the creditors give loan to the company, right? And in subject of financial statement, we can say that the particular business organization, right, the financial position is sound or not, right? The creditors wanted to know that. It means the creditors give the credit to the company in the form of loan, right? So creditors wanted to know whether the financial statement of particular company is sound or not. Is sound or not. So the loan, repayment of loan, the question rises with us that the creditors wanted to think that our repayment of loan in a address to the creditors, right? That means repayment of loan. એટલે આપણે ખબર પડે, એટલે it means the creditors ને ખબર પડે કે ફાઇનાન્શિયલ સ્ટેટમેન્ટ પર્ટિક્યુલર જે ઇન્ડસ્ટ્રીઝ છે, બિઝનેસ એન્ટરપ્રાઇઝ છે, બરાબર, જે ક્રેડિટર્સે કંપનીને જે લોન આપેલી છે, લોન સેન્કશન બાય ક્રેડિટર્સ ટુ ધ કંપની, રાઈટ, for the purpose of repayment of loan, right? એટલે repayment નો મતલબ શું, તો કે એના ક્યાં ઉપર ખબર પડે, તો કે ફાઇનાન્શિયલ સ્ટેટમેન્ટ ઉપરથી, ફાઇનાન્શિયલ સ્ટેટમેન્ટ, રાઈટ? તો ક્રેડિટર્સને ખબર પડે કે કે પર્ટિક્યુલર બિઝનેસ ઓર્ગેનાઇઝેશન છે એની ફાઇનાન્શિયલી કન્ડિશન સારી છે, ઇકોનોમિકલી દે આર ગુડ, રાઈટ? તો ક્રેડિટર્સને ખબર પડે કે આપણી રીપેમેન્ટ એટલે કે જે લોન આપી છે એનું રીપેમેન્ટ કેટલા ટાઈમે થશે, કેવી રીતે થશે, એ એને ખબર પડે, રાઈટ? સો દે વોન્ટેડ ટુ નો ધ ફાઇનાન્શિયલ સ્ટેટમેન્ટ ઓફ ઓર્ગેનાઇઝેશન, they have given loan to them, right? Then the second thing, it means the person, employee or parties. Next is employees, right? Employees is very good, very intelligent they are working in a company, right? Employees are working in a company, they are bread or butterfly of business organization. Without them the business or companies can't do more anything, right? Why? Because of they are working in a enterprise, business organization, or you can say the company, right? The one more thing, they want to know the financial statement. For what purpose? The employees wants to know the financial statement of particular business enterprise. For what purpose? They are expected to know our subject of salary, right, bonus, or any other remuneration, right? So for that purpose, if the financial position of the particular company, employee working over there, right, the financial position of the company suppose sound, right, then employee what expectation of the employee, what if salary the payment of salary would be increased, the payment of bonus suppose increase, right, and other remuneration also given by the company to the employee, right? If the financial position is sound, then the expectation of employee becomes, right? Then the consumers, the other parties is consumers, right? So the question raised with us that how the financial statement of particular business enterprise is useful to consumers. How? Right? Say the consumer wanted to know that, see, the good quality of product, right? How the good quality of product is done? If the company earn gradually more and more profit, for an example from 5 years, right? It means that the particular business enterprise, or you can say the consumers, having good profit, right? If the financial position is sound, right? So the customer, see, the customer is the king of market. We know that, right? So customer blindly trust. If the particular business organization having good quality of product, right, then customer is blindly trust. જેને આપણે કહીએ ને કે આંધળો વિશ્વાસ, બરાબર, blindly trust to the consumer or a particular good quality of product of particular company, right? They blindly trust. For example, see the product of Reliance, product of Tata, right? Then product of particular most famous companies, right? So people, it means the customer they blindly trust for purchasing, right? The customer purchase the good quality of product. And how the good quality of product is come, right? If the financial statement of particular enterprise, business enterprise is sound, right? Then one more thing is in the part of investors, right? Then how the investor wanted to know the financial status, we can say that, right? See, every organization and company have motto and ambition to know that their financial status, right? Investors, for the subject of investor, how the financial statement is useful, or how they wanted to know the financial status of particular business enterprise, right? In which they invest their money, right? Or the expectation of investor is that our invested money is rewarded with increasing value, or it means increasing amount or decreasing amount. That depends on the financial status of particular business enterprise, right? So the investor wanted to know that, right? Their money of investor, it means their money is safe or not, right? That we can know that on the basis of the financial status. It means financial statement, right? See, the risk plus return. If the risk is high, then return may be also high, right? So the reward amount they wanted to know, either increase or decrease. Then they wanted to know on the basis of the financial status or position of the company, right? Then second thing, investors. See, the investor is subject with equity shareholders, preference shareholder, debenture holders, right? They are investors, for like an example, right? Then the last party is interested in financial statement is government. Last is but not least, right? Government. So how the government need the financial statement, right? How the government wanted to show or know that the financial statement of particular business enterprise, right? See, the government wants to know the tax liability, right, in particular business enterprise, right? What sort of point is that? I am telling you that the government wanted to know the tax liability of particular business enterprise, right? And the financial statement is also useful in a subject to government is to change in policy, right? The policy, right? Then there are a lot of decisions that are relating with the financial statement of particular business enterprise, right? Again, one question raised with us, there are so many companies exist, right? So government, which companies choose they wanted to know the financial statement, right? So most famous company, right? Most company having more capital, right? They wanted to know on the basis of that It means the એ જે બધી કંપની છે એના ઉપરથી એના જે ફાઇનાન્શિયલ સ્ટેટમેન્ટ છે એના ઉપરથી ગવર્મેન્ટ ડિસિઝન લેતી હોય છે, બરાબર. The tax liability, what sort of amount of tax liability, reserves, equity share capital, preference share capital, and all the things, assets and liability, all the things, right? So government wanted to know that, right? Then tax liability, the financial status, right, of particular business enterprise, right? So these are the parties they are interested into financial statement, which they are our business concern, right? So we also called as that they are users of financial statement, right? So this is the blueprint or simple introduction of financial statement, right? Now we complete here the financial statement, right? Then now I am going to start your new chapter. It means our syllabus is start from new chapter is redemption of redeemable preference share capital, right? So the chapter name is redemption of redeemable preference shares, right? This is the chapter. This chapter is in our syllabus, right? The chapter number 2, the part of B, right? The chapter number 2A, this is relating to bonus shares, right? So first of all, we should try to understand to redemption, redeemable preference shares, right? Why this chapter is needed, or why the redemption of redeemable preference share capital company can do this. Why company do this, right? Say there are certain provisions of Companies Act, right? There are certain provisions regarding the Companies Act regarding the redemption of redeemable preference share capital. Before starting this chapter, at least we should know that the preference share, right? Preference share and preference share capital, right? The preference share are one of the special type of share having fixed rate dividend, right? This is the special type of shares. I am going to start explain to know that the word preference share, right? Then in next we should try to understand the redemption of redeemable, right? Redemption, right? So first of all, preference share. What is the preference share? See, the preference shares is a special type of share having fixed rate of dividend, right? So there are different Companies Provision Act, different provision of Companies Act 2013, right? So first of all, what is the preference share? See, the preference shares are special type of shares having fixed rate of dividend, and they carry preferential rights. Right? See, the preference shareholders, they are creditors of the company, right? In the financial statement, I told you that in a part of investors, right? See, the preference shareholders are creditors, parties of the companies, right? So the payment made to the preference shareholders, right? According to the Companies Act, there are different creditors of the company, right? So one by one, in a step by step, that prescribed in the Companies Act, right? First of all, fully secured creditors making payments, right? Then legal charges and preferential creditors and debenture holders, right? And then preference shareholders, right? Before making any payment to the equity shareholders, right? First you should make, that means company should make the payment to preference shareholders, right? If there is a left amount, or you can say the surplus amount is there, right? Then after making payment to the preference shareholders, right? Then make payment to equity shareholders, right? And there are voting rights, right? There are difference between ordinary share and preference shares, right? Ordinary share and preference shares. There are voting rights also, the preference shareholders, right? Right? Then this is the preference shares, right? Then what is the preference share capital, right? Preference share capital. The capital raised by issue of preference shares. I am using the word, see, the capital raised by issue of preference shares. Then this total of preference shares, right? Then we can call as that preference share capital, right? Preference share capital. So this is the different terminology, two terminology, preference share and preference share capital, right? Repeat, preference share are special type of shares having fixed rate of dividend and they carry the preference share rights, right? They have preference share rights, right? And also the voting rights, right? Then capital raised by issue of these preference shares, that called as the preference share capital, right? Then the first one of thing is that the why the company need of redemption of redeemable preference shares, right? If suppose the issue company company cannot be issue the shares, right? And due to that the company can't earn more profit, right? Or any suppose financially crisis or anything, right? Then the company needs to redeem preference share capital, preference shares, right? So if the company redeem the redeemable preference shares, right, there are certain provisions regarding that we will go through that, right? See, the company can't purchase its own shares, right? Company can't purchase its own share. If the company wants to redeem the redeemable preference shares, right, then there are partly paid up shares, right? There are partly paid up shares or the fully amount of their shareholding, right? For that purpose, the company required the permission of court, right? Permission of court, right? So these are basic funda or basic theory of redemption of redeemable preference shares, right? There are more theories regarding this chapter, right? Then we start to explain the provision of Companies Act. Which are the provision, right? What sort of the provision regarding Companies Act, right? The first and very much useful provision is that the company suppose needs to redemption of redeemable preference shares, the required, if there is a partly paid up preference share is there, right? Let them first it convert into fully paid up share, right? Fully paid up preference share, right? First of all, this required. For an example, company having face value rupees 10, right? Rupees 10 face value, right? And rupees 8, here it is paid up value that I told you in first lecture, paid up value, right? Then rupees 2 remaining is, that is called amount, right? Repeat, if the company having face value each of rupees 100, right? Then paid up value is then rupees 8, and this 2 rupees, the difference is called up amount, right? Then in that case, if the company wants to redeem the redemption of redeemable preference shares, it means the redeem the preference shares, right? Then first procedure is go through the first accounting treatment is made for call amount, right? Call amount to the call amount from the holders, right? Then company can redeem their preference shares. So this is the first accounting treatment or accounting provision regarding Companies Act. Then second one is that the such preferences can be redeemed from distribution profit of company and proceeds of share issue. Right? See, there are methods of preference shares, redemption of redeemable preference shares. Right? First is that company distribution of the profit, right? It means the company redeem their preference shares from where, right? From where the sources of is there, right? First of all, distribution of profits, first thing, right? And second thing, the proceeds of, or you can say proceeds of new issue shares, or you can say that the fresh issue, right? See, if suppose you are going through the redemption of redeemable preference shares, the first thing you should keep in mind that the distribution of profit and the proceeds of new issue shares. It means the fresh issue, right? Again, I repeat this provision. Such preference share can be redeemed from. It means the preference shares redeemed from. First thing is distribution profit. It means the profits are available for distribution, right? It means there are certain types of profit. It means certain amount of profits, right? Certain types of reserves is there. It means that the profits available for distribution, right? It also includes that the free reserves. Right? See, this chapter is focused on free reserves or profit available for distribution, right? And the last one is the proceeds of new issue shares. It means the fresh issue, right? See, we can also say that these are the methods of redemption of redeemable preference shares, right? It means the company should have the distribution of profit. It means the company પાસે profit available હોવો જોઈએ. શેના માટે? તો કે પ્રેફરન્સ શેર હોલ્ડરને પેમેન્ટ કરવાનું છે, બરાબર? એના ડિસ્ટ્રીબ્યુશન માટે, બરાબર? પછી કંપની જે રિડમ્પશન કરવાનું છે પ્રેફરન્સ શેર એના માટે કંપની ન્યૂ ઇશ્યુ શેર્સ પણ કરી શકે, બરાબર? એના પછી then for the specific purpose of redemption preferences or from both an A and B, right? It means, in short, we can say that the company follow these two methods. It means if the concept of redemption of redeemable preferences wanted to know that, right? Then it required the two aspects. First one, profit available for distribution, right? It means the distribution profit, and second one is that the proceeds of new issue of shares, right? The company can issue company can issue preference shares or equity share also, right? So we can say that this free issue, right? There are different terminology, right, of this chapter, right? We will see later on. And before we end of this session, right, the remaining provision of the Companies Act, right, we go through them, right? Next, if the preference shares are to be paid back with the premium, the loss due to premium on redemption should be met with the distributable profit and trade balance of premium received account. It means suppose company redeemed the redemption of redeemable preference shares, right? And if there is a losses, right? Even the loss is there, right? The payment should be made to the preference shareholders, right? If the company redeemed their preference share capital with the premium, right? So the premium on redemption of redeemable preference share capital is loss for the company, right? So there are journal entries is there, right? We will see later on what are the journal entries to fulfill this calculation and concept of redemption of redeemable preference shares, right? So there are different journal entries regarding redemption of redeemable preference shares. We will see later on, right? Then in that case, if the company suffered from loss, right? Even the company should make payment to the preference shareholders, right? For that purpose, the company should having the distribution of profit. It means the profit available for the distribution, right? For making payment to the preference shareholders, right? In case that the company suppose issue the preference shares, right, at face value or with premium, right? Face value, it means the 10, right? And if the suppose company issue preference shares ₹1 premium, right? So total amount of preference shares with the premium is 11. So the company make payment with the 11 if the company issue preference shares with the premium, right? So again I repeat this provision of Companies Act for redemption of preference shares. If the preference shares are to be paid back, it means the payment made to the preference shareholders, right? With the premium, the loss due to preference premium for redemption should be made with the above two topics, right? It means the company should have the distributable profits, right? For making payment, company પાસે શું હોવું જોઈએ? Distributable profit હોવું જોઈએ preference shareholder ને payment કરવા માટે. And another thing is that the company have the credit balance of premium, right? Before the redemption of redeemable preference share capital, right? Before that company have the amount of premium, right, in a premium account, right? So that premium amount is useful for redemption, right? Then the profit and loss credit balance, right? And all the free reserves, dividend equalization funds, right? These all are the reserves that useful for payment back to the preference shareholders, right? So these are the provision of Companies Act, right? Then fourth one is, if the amount is paid from the distributable profit, the amount equivalent to the face value of shares paid back, it means redeemed, to be credited to the capital redemption reserve account, right? Now the concept of capital redemption reserve account is done, right? So the concept, it means the capital redemption reserve account is needed for the fulfillment, or you can say the payment made to the preference shareholders, right? So this concept of capital redemption reserve account we will see later on, it means in our next session, right? So thank you for watching this video, right? If suppose you have any doubt or query, right, please ask me in my personal number, right? So thank you, I hope you are safe. Thank you, we will see later on. धन्यवाद.